everyone. Exactly a year ago, I did a video on affordable housing finance sector of India and identified opportunities in this space. I mentioned that there's a big structural tailwind in housing sector of India that has one of the lowest mortgage to GDP ratio of 11%. So mortgage to GDP suggests home loan as percentage of total GDP. Just for comparison, in US this ratio is 67% and in UK it is 90%. In fact, this mortgage to GDP ratio outside top 100 cities of India is just 3%. And even today, majority of population in India still lives in small towns and villages. That's where there's a huge opportunity for companies in affordable housing finance sector that caters to home loan for low and middle income sector of semi-urban and rural India. Because as India's rural population and middle class population would prosper, there would be more demand for affordable housing. So I discussed three names in this category: Home First Finance, Aavas Financiers and Aptus Value Housing. However, if you look at the returns in last 1 year, it has been pretty much flat. Aptus Value Housing 1 year return is around 12 to 13%. Aavas has improved recently with 18-19% returns and Home First returns are just around 7 to 8%. Among these three players, my preferred pick were Home First and Aavas Financiers. In fact, they are also part of my Diwali 2023 picks. But the performance of both Aavas and Home First is subdued so far. So in this video, I want to discuss the reason for underperformance and share my latest viewpoint. But before we begin, a disclaimer that my videos are only for educational purpose. The idea is to share my knowledge with you all and then you can do your further research to build conviction before investing your money. In case you are looking for stock tips, you can skip my videos. I cater to a niche audience that has a long-term investment mindset. And I strongly believe that if a person wants to create wealth in stock market, he or she needs patience and conviction. And that only comes when you have the knowledge. Otherwise, even 20-25% correction will create panic. Alright, let's get started. Okay, before we directly jump onto the individual performance, let's take a step back and understand the potential in the housing finance segment of India. So first of all, the biggest growth driver for housing finance sector is the under-penetration. Home is a dream of every person in India. And if you look at the Indian demographic, more than 60% people still live in the rural part of the country and nearly 80-85% people in India are either middle class or below middle class. That's where there are a few NBFCs that specializes in giving low ticket housing loans in the range of around 10 to 15 lakh rupee. And that created a huge market for these affordable housing finance companies. Now the question is, aren't these affordable housing finance companies have threat from established banks? Well, I explained it in my last video as well. So first of all, the bigger banks don't have a lot of focus on this segment, mainly because these bigger banks have very strict guidelines on loan disbursement where you need a lot of documents. And in many cases, small business owners and vendors lack those documents. Plus, bigger banks are also more focused towards the urban segment as well as the commercial banking, which is more profitable. Secondly, even if the bigger banks try to capture this market, the affordable housing finance segment has a very low loan ticket size in the range of around 10-15 lakh rupee. Hence, the EMIs are also lower. For instance, a 10 lakh rupee loan for 20 years would have an EMI of around 10,000 rupee. Now, if the established bank offer this interest rate at, let's say, a lower rate, they won't change the EMI significantly. Due to that, people normally don't switch to bigger banks. So that switching threat is also very low. Then another area where these affordable housing finance companies are better than traditional bank is the agility of loan disbursement. While traditional banks take ages to disburse loan, Aavas does that in 10 to 12 days and Home First disburse loan within 2 to 3 days. Hence, these affordable housing finance companies have created their own niche in the segment. In fact, they have done exceptionally well. For instance, Aavas Financiers AUM has grown from 0 in FY12 to 173 billion rupee. That is 17,000 crore in last 12 years. Every single year, their AUM has grown. And it includes the worst phases of COVID, demonetization and so on. Its revenue has grown from 18 crore in March 13 to 54, 104, 191, 305, 494, 700, 900, 1100, 1300, 1600. Likewise, its net profits have grown from 2 crore in 2013 to 6, 9, 33, 57, 93, 176, 249, 290, 357, 430 and now at 491 crore. Again, consistent growth every single year. Similarly, if you look at Home First, its AUM has expanded from 8.4 billion rupee in 2017 to 96 billion rupee. That's 41.7% CAGR growth. Its revenues have grown from 6 crore to 20, 39, 60, 94, 145, 264, 411, 489, 596, 796 and now at 1157 crore. Every single year increase in revenue. And net profits have also grown from 3 crore to 6, 9, 25, 46, 80, 100, 186, 228 and now at 306 crore. Now if you look at the share price, Aavas Financiers IPO was in 2018 at around 800 rupee and then it zoomed to 3000. But from there it has corrected more than 50%. Home First Finance IPO was in 2021 at around 550 and from there it doubled to 1000 but again corrected to current levels of 850. The question is, when both Aavas and Home First are growing at exponential rate, why is their share price not reflecting the growth? So there are certain common factors and certain company specific factors. First common factor is higher interest rate that has increased the cost of borrowing. Try to understand this. These financial institutions raises capital from market and then give loan with a certain margin. But over the last 2 years, the interest rate in India have increased from 4% to 6.5%. As a result, there is margin pressure on these companies. In fact, this is the case with all the NBFCs. For instance, this is the chart of Aavas Financiers where blue line represents the cost of borrowing and bar represents the spread, that is interest margin. So cost of borrowing on year-on-year basis has increased from 6.88% to 8.07%. Although they did increase the interest rate in loan, which is yield, but the loan rate increment is not that high. As a result, its margins have fallen from peak of 5.77% to now at 5.06%. And on quarter-on-quarter basis, there is a clear trend of fall in margin. Same story with Home First. Due to increase in cost of borrowing, its margins has reduced from 5.7 to 5.4%. And there is consistent fall in margin in last 3 quarters. The question is, how long will this margin pressure sustain? Until RBI reduces the interest rate. In fact, today only RBI declared their credit policy where they have kept the interest rate unchanged at 6.5%. So until RBI start reducing the interest rate, there will be margin pressure on both Home First and Aavas. Having said this, both the companies are growing their AUM and disbursement. So top line is consistent. But the earning growth has slightly reduced due to the higher interest rate. Then second common reason for fall in share price is selling pressure from promoter. Actually, both companies have PE firm as their early investor. Hence, they got classified as promoter during the IPO. Aavas promoter is Lake District and Partner Group and they are consistently selling their stake. The reason is they invested at very low levels and now booking profit after listing. Likewise, Home First promoter is True North and Aether Mauritius Limited and they are again selling stake. But the key question is, who is buying the stakes? As long as the stakes are purchased by FIs and DIs, it should not be a problem at all because it is going in strong hands. And that's what exactly is happening. In Home First, FIs have increased the stake from 9% to 25%. Consistent buying. And include top FIs like Global Pension Fund, Small Cap World Fund, Goldman Sachs that consistently increasing stake. DIs have increased stake from 6.4 to 11.8% and public holding has sharply reduced from 50% to 39.5%. Likewise, in case of Aavas, FIs already hold significant stake, so there is not much change. But DIs stake are up from 8% to 24%. Last 12 quarters, DIs are adding Aavas consistently. Although public holding has also slightly increased, but major buying is from DIs that include the top names in the industry. So as long as PE firms do not completely exit their stake, there will be selling pressure in the near term. Having said this, long-term story is 100% intact. Then third reason is stock specific. In case of Aavas, its stock price zoomed exponentially after its IPO and valuation skyrocketed with price to book touching highs of 10.8. However, since its EPS is consistently growing and stock price has not moved much, its price to book has fallen to 3.4. That's 70% fall from peak valuation. Likewise, Home First price to book touched high of 5.4 and from those levels it has corrected to current price to book of 3.6. As far as future growth is concerned, I have read the latest con call of both the companies and management has been very confident of growth in FY25. In case of Aavas, there was one more important reason for sharp correction. Company has undergone a management transition with new MD and company is upgrading its technology to cater to large scale of business. Due to that, company's loan disbursement growth fell down to just 7.2% in Q3 of FY24. However, the growth is back on track with disbursement growth of 39% quarter on quarter and 20% year on year. Going forward, this would be the key metric to watch. Home First management has also guided for 30% AUM growth in FY25. Aavas management has given AUM growth guidance of 22 to 25%. So considering strong growth guidance and sharp correction in valuation, I would like to keep my conviction on both the companies. In fact, I look at it as an opportunity to consider accumulating them. Of course, only if you have a long-term investment horizon. I was also going through the viewpoint of some of the brokerage houses. For instance, Jefferies has shown confidence in affordable housing finance in its recent commentary. It says that Modi government can announce the much-awaited revamped affordable housing scheme. Affordable housing finance companies like Home First, Aavas should be direct beneficiary. Then Nirmal Bang has published its updated view on Home First after Q4 result with a target of 1150, which is around 35% upside. Centrum in its latest report has given target of 1250 on Home First with 47% upside. Motilal Oswal in its latest report on Aavas has given target of 1750. Please note that the idea is not to share brokerage house target but to understand the common consensus among brokerage house on Home First and Aavas, and all of them are positive. That would hopefully boost the confidence if you are already holding these stocks in your portfolio. Personally, I hold both Aavas and Home First in my portfolio that I have recently discussed on my weekly series, where I share one exclusive video with the exclusive community for long-term investment. In case you want to explore my weekly series, you can visit my website or explore the join button. So in this video, we discussed two stocks, Aavas and Home First from affordable housing finance segment. Both of them are underperformers in last 1 year, but historically, they have grown at an exponential rate. Yes, there are near-term challenges that has created negative sentiment and hence they are neglected stocks today. However, as a long-term investor, I believe there is immense growth potential in affordable housing finance segment of India. And both Aavas and Home First are today trading at very reasonable valuation with excellent growth visibility in the long term. Also, all eyes would also be on new government budget, where it is expected that government will take some step towards affordable housing, and that can benefit companies like Home First and Aavas. Okay, before we close this video, if you are new to this channel, I would suggest watching some recent video. For instance, couple of months ago, I discussed the opportunity in water recycling sector of India. Then I discussed the wealth management sector of India. I also shared my viewpoint on IT sector, private versus PSU bank. Then I did an interesting analysis on EID parry transformation from sugar to FMCG company, turnaround story of SW Solar, and so on. Folks, I spent a lot of time doing this research and present it to you all so that you can get useful ideas for your investment. Hope you will find this analysis useful. Now tell me in the comments, what is your take on Home First and Aavas? I'll see you next video. Till then, take care.